Hi guys, welcome back to Marantz Rantz. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. We're going to talk about GameStop earnings report. Now, some people are out there making videos and predictions about GameStop coming in at around like 19 cents a share, earnings per share. That's around $84 million of profit for the year versus $6 million, which they made last year. But what I decided this morning was I'm going to go ahead and show you how I come up with my totals and what I see. So to know your totals for this year, what's coming out, GameStop's going to be dropping a 10K. And when they drop the 10K on Tuesday, you're going to want to go ahead and find out, like, okay, well, where have they been? What were they at? Things like that. So I'm going to go ahead and show you what we do. So first you go to the Edgar system, right? So you're going to come here, you're going to type in GameStop, and you're going to go to any filings. So here I'm going to go to the 10K itself. This is last year's 10K. So when I go through the 10K, I want to find out a couple things. One, I want to know all the totals. There's this thing that we look at called adjusted EBITDA. And adjusted EBITDA takes into consideration the one-timers, as we call it. So I'll give you an example. GameStop closes 200 stores. Well, there's charges that go into that. There's these, you have to pay fees as far as shutting down the store, selling off all the inventory, shipping out all the excess, the shelving, the terminating the leases, whatever comes out to, that's where you're at. So I'm going to look back at this. This is the amendment. I clicked on the amendment, not the actual one. Yeah, I thought so. So here's the actual one, the filing. All right, so close that out. Okay, I want to go here to stockanalysis.com. I also want to pull that up at the same time. A lot of great info here. If you go to financials, right? I want to show you guys this too. So, annual wise, if you go look here and you look at just last year, right? We'll just use last year as like a barometer. You're going to see total $5.2 billion worth of sales. You're going to see that there was a cost of revenue and then your gross profit. So trailing 12 has you kind of close to your same gross profit, except this number is going to go up because of quarter four coming in from this year versus last year, and I'll explain all that in a minute. Your SG&A came down from year versus year, so it came down around $400 million. It had been up the previous year. It actually was increased, but as it comes down, you right there, I want to know that number. So that's going to be 1675 versus the 1271 of last year. So right there alone, it was $404 million is what GameStop saved on SG&A. And it's right here, this part, right? Yeah, I did it right. Okay, so 404, I want to put that in the bank right now. Just know we saved $404 million, and we lost about 650, somewhere in that range. Yeah, is it 650? 650 on top line revenue. So you lost $650 million top line revenue, but it saved you $404 million on SG&A. I don't know what the ratio is. I don't really care. I want to see what impact store closures has on top line and bottom line. And that would be your SG&A expenses out the door. So you see the swing on operating income. They went ahead and saved it right there. So your operating income comes out to around a decrease of around 330 something plus million. Okay. Now, the good thing for GameStop, what they did was they actually had interest to cover that operating income. Interest minus taxes. So you have asset write down, you have pre-tax income, and then income tax expense, you'll see how it bounces out to 6.7. Right? So we went from negative 313 to 6.7. So we actually had a $319.8 million swing of profit. And people need to know that's a drastic improvement, not just 6.7, like Wall Street likes to tell you. They're like, oh, GameStop made $6.7 million. That's it, 6.7. And you're like, what? Dude, Ryan Cohen made drastic improvements. Yes, he did. He actually swung it $319 million. So when you take that into consideration and you swing it the other way, and I'm going to explain, GameStop now has $4.6 billion. People just write that off as and say they have this cash and they're not doing anything with it. Well, they are doing something with it. It's generating interest. And as it generates interest, that's money to the bottom line. And so your interest is here, $123 million. So now we're working off this dynamic of they had 49.5 and that resulted into a $6 million profit. Now you're going to go ahead and swing over 123 And what's that going to result to? Is it going to be 6 million plus the extra, I guess right here, 73 million? So you're going to put 6 plus 73. That's going to put you, okay, at a good starting point of $79 million of profit for this year. If all things considered, this is where we were operating from, right? And I'm just talking all these metrics here, all of these. So if your sales came in line, which it's not, it's $1 billion less this year. So you're like, hold on, $1 billion less. Now we got to go and look into other things to take into consideration. So the next part we take into consideration is going to be gross profit margin. Now your gross profit margin increased from 23% to 24% from last year to this year, from the previous years. So as they continue to increase for the next 3 years, you'll see this year we're gobbling it up. You're only a 1.5%, and your margins went up. And remember, the swing profit of $300 million. But now we're additional 2.5% to 3% on margin. It's because we're selling, these PSA graded cards where the margins mark up great in your favor. Certainly for GameStop, because they're buying the cards and they have a system. And the other part that I would tell you, just operationally for GameStop, is the fact that their inventory is controlled online and it's transparent and everyone knows. This omni-channel marketing and sales really is the technology that's built into this company. There are companies out there that are archaic, that use like DOS programs and they don't know. And even some of those are great. But if you can keep track of your inventory, then the buyer, the buyers for your company know how to, get you more. I just put it that way. But GameStop saved on logistics. They saved on what we call final delivery. Okay, so final delivery is huge, and that means like they buy the product and they deliver the product to you. What's the cost? There's cost to make what they call make the landing, right? So when I look at GameStop, everything's been improving. So yeah, I don't think they're going to come in just nuts to nuts, just same metric, same system, and they're going to come in at what I write 79 million. Let's just call it 80 million. No, I think it's going to be a lot more than that, right? So that puts you at around 17 cents a share, considering the float got extended. But there's something else I want to look at, because just because they gave you a number, and I'm going to show you this number, just because they gave me a number on gross profit, just because they gave me a number on SG&A, I have to know more about it. So right now, what I do know is that they've shrunk down SG&A $150 million so far. But there's a lot more into that number. So let's go look at it. So when we go look here, we'll see that what was reported after quarter four last year, they had 2,900 buildings, domestically, 2,900. We now know that GameStop has closed over 400 stores domestically. We have a website that we looked at. I followed it the other day. So I'm just going to call 2,500 right now. Now, was that after February or was that before February? That's what you got to ask yourself. From what I was reading, what I could see reported was they were closing after Christmas. This is very smart for GameStop. To be closing stores before Christmas would be a nightmare. You want Black Friday, you want Cyber Monday, you want all these Pro Weeks, you want the Pokemon releases, you want all of that. And that all happened right around Christmas time and 1 week after. So, yeah, closing stores after those launches and then selling off the merchandise means not reshipping, liquidating out all that inventory. You don't have to refurbish. You don't have to fill up the coffers again. I don't have to put anything back into it. So if I don't have to refill on inventory, that's more cash to the bottom line. So I think cash flow is going to be $400 million plus for the year. I think it's going to be really close to $5 billion. It's just me. I say $400 million, but I'm just trying to make it a round number, maybe 350, maybe 300, somewhere in that range. I've seen it. And so if their cash is going in one direction, and they're about $200 million less on inventory spent this year versus last year. And I already saw that number. I had studied it like 2 days ago on the live. But as we come across, you're going to look at your assets. You're going to do a balance sheet. And last year, just so that we're clear, we'll look here and here, okay? So as you go through on these 2 years, you'll see right here, inventory. So you'll see 682 carried over here to 632. Sorry. And that's with the closures of stores, and that's with the carryover. But you don't have see the 915 to 682? The huge drop-off is coming from the 830. You're going to look like around like 500. I'm telling you now, $500 million of inventory. So when it comes down, you'll see. Prepaid expenses is another big one for me. That means GameStop paid their bills early the previous quarter. So they already paid, right here, $115 million versus the 47 million last year. So I think cash is going to go up on hand for those reasons. And as I look, and trust me, I've looked, I can't see how these guys are not running. And this is a business that runs off at like $900 million. You could have GameStop, the company, you yourself, with the assets on hand, $900 million. Liabilities of $800 million, whatever. I mean, honestly, they don't have that many expenses to run this business. Look at this. You have inventory, you have prepaid expenses, and that's basically it right there. Receivables and combos. Like, there's just nothing really there on asset side. And yeah, maybe capital, human capital would be the one thing. But as far as liabilities go, you're rolling in at 1.1. 1.1 total liabilities of 1.4, and that includes all the leases, the debt, everything you see. They have literally zero debt. $9 million to go from 216 to 9 million. You paid off all your debt. Your net cash flow is there. And remember, they were once a very profitable company that was retained earnings of $400 million. They're -2. This number is going to go up, guys. This number is going to go up. This is going to be flush real soon. I'd say by third quarter of 2025. Third quarter, it'll be flush. But your shareholder equity is there as well. So don't let me get thrown off though on what we're trying to do. We're trying to get you a number, and I'm going to tell you why. So as I come here, yes, GameStop's trying to sell all their Canadian stores, and I understand it, right? Ryan Cohen's a huge supporter of American stores, the branding, the ideology of it, just because of what he wrote. I didn't write it. He wrote it in a tweet, and he said, Canada, the inclusion, the diversity, all this nonsense he doesn't want to deal with. So he wants to sell off 203, but he hasn't yet. From what has been reported, they did sell every single store in Italy, and they closed everything in Germany. So that's been reported. So from the 400 domestic stores they closed down, they then reported that they were closing down 264 and 69. I've already done the math, and I'm looking at around 730 stores being closed nationally, like worldwide. So if 730, that counts for 17% of their footprint. So I'm just curious as to how much SG&A do you save if we didn't buy more. Like, I would give you this example. The inventory we didn't buy to refill up the stores itself. We didn't have to. You sold off Christmas, and then you closed the stores. But in this case, they closed these stores internationally before that Christmas quarter in the third quarter. They didn't report on the number of how many stores closed, but I'm going to show you guys something. Let's go to the quarterly numbers really quick. Quarterly number here tells us that GameStop is trailing on, we'll go here on income. So right here, they have more revenue coming in the third quarter. We get it. Cost of revenue is better because of the ratio, the actual gross profit margin. But it was the SG&A number that was like, okay, so we filled up, we paid for it, but if we compare last year and this year, you're around $30 million saved. Here's what I want to factor into you guys. Like, I want to get this through you guys' heads right now. This quarter four right here at 318, okay, operating expenses, 318, 310, 336, and 360. The reason why these numbers, okay, are off compared to these numbers of the SG&A, why there's more operating expense, okay, is because they actually had to pay Immutable X a fee. They had committed dollars to Immutable X on previous filings, and they were actually paying those fees to Immutable X, and it was within the SG&A. So the $30 million extra that they had to pay, they don't have to pay it this year. So your SG&A should be down $30 million for the year versus last year. So when I go to trailing 12, I want to look and see, and I want to go to annual. Okay, annual. So we're going to go to SG&A, and right here, 30 million less is where it should be coming in because they were paying an additional 30 million. Remember, this number here and this operating income should be positive. It should be positive if they didn't have those commitments to Immutable X. They would have been positive $2 million operationally. This is why I always say GameStop's an operational cash flow positive company. Like, I'm like, what are you talking about? Like, operationally, they don't make any money. Yeah, they do. They're net positive. You just don't see it because you don't know about the charges they're paying to IMX, the commitments they had to them. They had a pledge. So once those were paid off, Now they're positive, right? Like it's there, but that's why this number is going to be so much bigger moving forward. It's actually going to go positive as well. You know what I mean? So I see it for quarter four for GameStop. Give me back the $30 million that you didn't pay this year. You didn't have to pay it this year. So if I throw on the $30 million on top of the profits that they had last year, right, and I throw on the additional interest, we're talking about $30 million more dollars on top of 80. So now we're at $110 million. Okay, $110 million, and that is just based off of interest and operational profit as an operating income that's owed to you. I'm not factoring in GameStop closing more stores down, bringing in better margins as far as gross profit margins. So I'm going to show you something. Let's go quarterly again. Excuse me. Got a runny nose, man. I'm recovering from last night. Last night was serious. My anniversary. Oh, man, we had a blast. Okay, so check this out. I want to show you gross profit margin. So this was last year, and everyone was excited, even me, about the potential of $40 million, right? Because that's basically what it would have been if we didn't have those Immutable X commitments. We would have had $40 million of profit. And, you know, Wall Street would have still complained, like they always do. But it would have been a swing profit of around, what was it? What did I say? 319. Let's add 33 more million to that. It's been $340, $350 million swing profit. But look at the percentages. You're looking at 23, 26, 26, 23. Those are your profit margins based off of SG&A, cost of goods sold, the COGS, and then whatever revenue they did make, right? Minus the COGS. So now I want you to look at their revenue and percentage of income now. Their gross profit margins are jumping up around 600 to 500 basis points per quarter. So you're in there 300, 400, 500, 600 basis points, and you ask yourself, so if the percentages are up on gross profit margin, how much higher can they go now that we're selling higher value product? Guys, the PSA graded cards and that markup they have, the margin of value is much higher than 30%. It's carrying the other categories. It might even carry console sales, accessories. It's carrying all categories, which is amazing. I'm dying to see the breakdown for collectibles. You know, GameStop has graded over 1 million cards PSA now that it's been announced or whatever. Close to 1 million, whatever. I don't even care. 1 million cards? How many additional people is that into your store? Are they buying top loaders? Are they buying little sleeves, penny sleeves? Are they buying collectible books? Are they buying additional cards that they're trying to rip and submit? Like, and then everything else they sell, right? It just by chance. So I love what GameStop's doing as a business model, but I really want people to see the difference as there are drastic increases here. And Wall Street hasn't even got to it. But you're looking for large improvements from to be at 29.9 versus 26, to be at 27 versus 23. Like, these are massive improvements. 31, and you guys can only imagine what it's going to look like, right? With 2 Pokemon releases and Black Friday and Christmas. I'm excited for the number. But the reason why I go here, and I want to go, let's see if it gives it to me. So ADJ. So right here, no, we want there's foreign currency issues. Yeah, we won't have that on operating losses because we're getting rid of all of it. I want to look to see if it gives me, what is this? 46.38. Let me see. Inventory reserves as of February and January were 38 versus 46. So yeah, so the inventory reserves they actually decreased. Amazing. Keep decreasing the inventory. You know, GameStop has a 6.0 ratio on the rotation through inventory, so I'm happy with that. We account for digital assets in coordinates with ASC 350. Yep, those were the Immutable X as they sold them off, as they got them. No impairment charge. We're good. I just want to see what they have. Currently translation, yeah. Other adjustments, nope. I just want to see. Adjusted costs, adjusted. Whenever I see adjusted, I want to make sure, it's a key word for me. I want to make sure that nothing's off on the other side. Okay, we're good. Not bad. All right, so that being said, let's go look at do we have an 8K for them during around that time? View all 8Ks. So we want to look at all 8Ks filed last year around March, right there. So boom, let's go for it. And here is results, operation, financial condition. We're good there. Departure of elected officials. Cool, cool, cool. Let's see what it says here. Press release. Okay, so this is a very good idea to read the press release from last year. SG&A resulted of 20% of net sales for the fourth quarter compared to 453 the previous year, 20%. So there's still 20%, which is what you're looking for in SG&A. Net income of $63 million for the quarter compared to 48 the previous year. Net income for this year is going to be probably double the 63, just so that we're clear. Based off of margins, based off of what I'm telling you on the one-timers that they had. So we'll look at that. Carried over cash, it's $1.1 billion, which is cool. I don't mind that. And we're down on net sales. Yeah, we're going to be down about $700 million to $1.1 billion on top line. We'd be lucky if we come in at, $4 billion. But, that's okay. The expenses, we got it compared to last year. So percentage of net sales, SG&A expenses were $1.3 billion for the year, 25%. So we're at 25% on SG&A versus last year, which is cool. I don't mind. So here we go. Adjusted EBITDA right here of $64.7 million for the fiscal year 2023 compared to a negative $192.7 of 2022. So I think the adjusted EBITDA is where GameStop really is going to capture a lot of gains. You're going to look at from 64 versus 7, versus basically 7, I could call it. So about $57 million more dollars coming into you this year on one-timers, so 57. Because you won't have them, the adjusted EBITDA. We're going to adjust it. So let's go 57 plus, what did I already say? We're at 80 million at least. So I'm looking at, I want the 30. I want that immutable X money back. So I'm looking at 33. So here's what I'm looking for prediction-wise. Okay, I'll give you a prediction right now for GameStop. I'm looking at $112 million of profit all the way up to, and that's the bottom side, that's the low side, all the way up to 169. What a number. So I'm looking for 112 to 169. Let's do some math really quick while we're there. I want 112, clear, $112 million of profit. And I want to divide that by the 446 amount of shares. Now, yes, we diluted our float, but like I said, and I even wrote this on X, by the way, 25 cents EPS. Compared to Wall Street, 7 cents EPS. By the way, Wall Street, when you guys adjust down to 7 cents a share from your previous quote, factor in that there's 140 million additional shares. So thanks for the 7 cents a share additional by not adjusting. You guys are idiots. But cool, I'll take 7 cents. But it's going to be 25 cents, right? On the bottom, that's the low side. The high side, if I had to go with the high side, I'm looking at, divide that by, we're looking at 37 cents. 37. So 25 to 37 cents is your EPS. Okay? Quote me on this. Now, Rantz, could you be wrong? I don't know. I don't know. I do know. We study, guys. We just go over and over and over. And like, you just keep going. Look for a number. Maybe there's a number I missed. Maybe there's some I'm not factoring in. But it looks like GameStop shut down all the stores right after Christmas, which is great. You shut them all down. All those expenses are on your balance sheet, which is fine. But carrying forward into quarter one, you have the ball rolling. You have inventory that rolls over. You have profits that are going to roll over from quarter to quarter. And I know about the one-timers. I do. I study them. So, yeah, I think cash flow is going to go up because you sold off all your stores, all your inventory. I was there. I was in the damn building, and I was buying everything on clearance I could just to support my investment, support the company that I love called GameStop. So I'm looking for 25 cents, 25 to 37 cents EPS. That's a big window, but it's not that big of a window when you think about it like this. Wall Street's predicting 7 cents. Yeah, okay. Well, we're going to be about 400% surprise on that number. Get ready. I believe earnings are going to drop in, let's see, I said 37 hours plus whatever's left for today. And today it's already 8 o'clock, so about 16 more. So we're looking at, I'm not good at math, but I'm looking at, whoa, that's a big number, 53 hours. So in 53 hours, I was actually telling my wife last night, this is more personal now. Hey, all you guys who want to see the video for all the numbers and stuff, there you go. This is the personal side of the show that I do here. Well, you guys know I live in front of you. I don't mind. I don't mind being the GameStop investor that I am. Somebody asked me how many shares do I have? 51, if you don't know. Then that's our own personal code, but we're good. I was driving with my wife last night, and we're driving, about to go out for our anniversary. We've been together 18 years, married for 12, and it was a surreal feeling. We're in the car, we're talking, and I'm explaining to her, like it was the worst date ever, right? Because we started out driving, and I'm playing music, and I'm just like zoning out. And she's like, everything good? And I go, yeah, baby. I said, I see it. I see it right now. I see this manifesting. Now, I don't know, right? I don't know what's the number Ryan's coming out with in GameStop. I don't know what they're doing, but I've done the math. I've done the deductive reasoning, right? Like I'm like, but I look at it and I go, okay, yeah, this is where we're coming in. And then you see the website change. Investor relations website verbatim changes word for word to mimic Berkshire Hathaway's. Right? At some point, the adults walked in the room and said, "Here's what we have." They hired an investor relations personnel liaison for the public, for social media, for everything. I was like, man, they're hiring for it. They're going to announce it, and here we go. And I'm not even factoring in like a Bitcoin or any of this nonsense that everyone's trying to tell me. All these tweets that come out with this guy who's, we're going to bring GameStop to Qatar. Ryan's going to come over. I don't even care. Nothing speculative here. It's just math and raw numbers tell me GameStop's positive and cash flow positive, and it's a profitable company. But if you can just operate off the premise that Ryan Cohen owns $1 billion of Alibaba, he owns $1 billion of GameStop, he owns several $billion of Apple. Like, he's a successful investor, and no one gives him credit for it. But he buys the right things for the right price, and he sees profit, and he makes the profit happen. So maybe this is a business that can scale, or maybe this is the business model that you can scale, whether you're someone else and you're thinking, are there some smart guys out there in e-commerce, some guys out there that can make this happen? Ryan Cohen, Larry Chang, Alan Adel, Jim Groupie, and everyone else. So I'm excited for what's coming out for GameStop. But as I'm driving down the road and I get giddy and I start telling my wife about the story of GameStop and why I think it's going to blow up, coming up real soon, and she looked at me and she said, "Why do you think that? Why do you think GameStop's going to carry over and be this great company?" And I said, baby, it's because I manifest it. Like I look at it and it talks to me, it tells me, and I know that sounds crazy to people. I know you guys think there are some crazy investors out here, and I'm going to tell you guys something, okay? There's not a single stock in the world, in a single security, a single investment you're ever going to make that has a following, that has YouTube channels, that has Twitter people, like everyone pumping it, saying, this is it. This is it. We're here forever. We're never leaving, right? Like I built this whole platform with you in mind. I never knew if anyone was going to show up. But the more info you put out, the more, and your approach changes to how you convey the message. Some people catch you on the right day. Some people catch you on the wrong day. That guy's an asshole. Like they don't know exactly what you stand for. I'm going to tell you guys something, okay? I'm going to continue to be here my whole life. The reason why I'm going to be right here in front of you, whether the stock goes up or down, is because just like you say you've never seen personalities or you've never seen YouTube channels that actually support an investment like this, I've never seen websites that battle the investment like this. They are paying people. They are doing things in a roundabout way to get you to forget about GameStop, to get you to go ahead and sell your shares and get out of the way. Well, when you can see through it all all the negative rhetoric. They tell you GameStop's a dying company. It's brick and mortar. It's not digital. It's Blockbuster. That they don't understand. It may be Blockbuster, and maybe Blockbuster didn't have to go bankrupt. Maybe a lot of companies didn't have to go bankrupt. But the influence of private equity pushed out. The influence of you, the consumer, the supporter, that's what's on the table today. So I'm happy to be a GameStop holder. I'm happy to be a GameStop influencer, as they call it. Well, you can call it whatever you want. Okay? I'm just an educator. And I want to educate you on this great investment called GameStop. Like I said, we're about 50-something hours away from changing the world. This is the earnings call you've been waiting for, America. Whether you want to invest or not, it's not going to change my day. But GameStop is about to blow up. It's going to the moon. I know it. Peace.